Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier. This is the week ahead. We've got a huge week on hand. It's good to be back in the saddle. Sort of nursing a little short position here. I'm in the NASDAQ waiting for this thing to break to the downside. I think that there's definitely a way that can happen. We've got NVIDIA earnings later this week. That's going to be the keynote event. If you're a Switch Markets client, you're going to get the newsletter beamed out to you before tomorrow's UK Open. But there's a lot going on. And we've got an absolutely huge week 47. I'm going to preview the biggest things that we need to look at least moving forward. There's politics. There's an incredible news schedule that we have coming out. An unprecedented week in a lot of ways. So I'm going to cover the big ones. We got to look at Bitcoin, though. Right now, I'm watching Bitcoin absolutely freight train through the 62% retracement. Interesting week to take a vacation last week. I was completely away. When I go away, I put it all down, and I don't look at the markets or anything. But I'm back, and I started last night breaking this market down and what exactly we think can happen. And right now, we're starting to see bearish sentiment creep into stocks, and that's one of those things that kind of expecting it. We're kind of expecting it, giving our news cycle. So good to see everybody back. Team Marina, good to see you. Welcome. Hi, Shane. I hope your weekend was fantastic. It was pretty good. It was a good week off, good weekend. I feel pretty good. Tina, good to see you. Tina, hi, Shane. Welcome back. It's great to be back, Tina. It's good to see everybody. A lot of folks here. Tuku, good to see you, Tuku. Andrea Garwal, pleasure. Andrea and Lita, good to see you as well. All right, let's start out with a little bit of price action here. See if I can remember how to do this, right? Well, after about 15 years and 10,000 of these things, 100,000 of these things. But I think that we've got a pretty good read, at least on this Bitcoin market. Now, we talked a lot about the 100,000 level. We talked a lot about what it was going to mean if that did give way, and we're seeing it. Right now, we are seeing it. We're seeing the bears pile into this market. There's a lot of rumors flying around. There's something about Bitcoin mining supposed to pick up around 60,000. I don't believe any of that. The miners are set. I mean, I don't even know if they mine Bitcoin to any profitable level anymore, just because it's so difficult to create a block in that blockchain. But what we're looking at right now is a major sell-off. It is compression. Absolutely. There's your run-up. There's your run-up. There's your sideways trade. Compression, and there's your break. We talked a lot about 106 being key. 106 treated us very, very well over and over again. But when those levels finally go, when a 38% level finally goes, then you get the big sell-off, 50% level. We don't play 50%. You could have got a couple scalps there right around 100,000, and then we broke deep, and now we're beneath that moving average. That is very, very important. We're going to talk a little bit about what's setting up in Bitcoin on the daily chart, and essentially it's a death cross formation on the 50, crossing under the 200. Probably going to cover that in the newsletter. But this right here, that's a big level for me. That 95 level was absolutely huge. I mean, I would rate that as really a heavy buy. It's not working right now. And here's the deal. If 94 goes, if 95 goes, Bitcoin's coming way off. And you're going to be looking at something like potentially 85, 78% retracement. This monthly wave is a pretty good one. This area right here, compression break. You broke beneath 94. 95's gone. 78's right there at 85.2. You've also got that monthly Bollinger midpoint. But this is a major, major event. Now, we've got a couple weeks left in the month. So I'm not ready just to say, okay, dump Bitcoin, get out right now, because if you do get a bounce and a close above 62%, that may be the intermediate term bottom. I am still very bullish Bitcoin, but this is clearly a short squeeze. They're squeezing out retail traders, and it is happening fast. So right here, this big break, if we come down here, definitely going to be a buy, probably a trade idea later this week, 85.250, maybe 85.5, maybe 87.50. Don't know just yet, but this is a major sell-off, and something really big's happening. Now, if you want to really take a look at what could potentially be developing here, when was the last time Bitcoin closed beneath my 13-month EMA? August of 2023. Closed beneath our zone, and then we got the bids, and that was really the beginning of the uptrend, and that was back down there right around 20,000. This is a big event, but don't get too carried away with this. Right now, the world's falling. Everybody's bailing out of Bitcoin, and that's all great. This is a bullish market. This thing can reverse very quickly. But I understand that if you were long and you're taking the heat, it's bad. I mean, it's getting really bad. So I wanted to start out with Bitcoin because I knew everybody was going to ask about Bitcoin. My personal views, love the pullbacks. I love pullbacks. This is why I wait for pullbacks. We may even pull up a yearly chart on Bitcoin a little bit later on and see if we've got a massive level we can look at, really like a 5-year level or at least a 3-year level. I think that could be the way to play this, especially if you're trading it on the cash market and you want to buy in and you want to get long with a little bit of meaning. Might be a great opportunity to invest. We just got to wait and see how bad the damage gets. But for right now, the shorts are winning. That's a big-time level. They're right around 95. Remember, if you guys are interested in trading any of this stuff, head on over to Switch. Right behind my picture, you can't really see it here, there's a little toolbar. You go ahead and give that a click and go down to our resources. Tremendous amount of trading tools. We got free trading tools. We've got all trading tools. There's all sorts of EAs there, lot size calculator, really anything you need to get up and rolling. Forex profit calculator, lot size, economic calendar, currency strength meter. We have been putting videos out on the Switch Markets YouTube channel. I'm confident you guys have been checking them out, but there's a few things that I've been going over, and a lot of these features are going to be what we're going to be building video content around, and we want to get you up and running with as many free tools as you could possibly have. So remember, and then if you sign up and you fund free Forex VPS, risk management EAs, and MetaTrader 5 platforms, it's all there for you if you're interested in becoming a Switch Markets client. If not, don't worry about it. All right, we've got a lot to go over here today. The first thing I want to start off with is we're going to go ahead and start off with what we've got as far as this week's lineup. Now, this is week 47. We're getting towards the end of the year. There's no question about it. I mean, we're almost done for 2027 or 2025. 2027 here. You're going to blink your eye, it's going to be 2027. But 2025 is winding down. We're getting into the holiday season, and the holidays typically are really slow, ugly times to be trading. They really are. You've got this week. This week's a big one. Next week's short. That's going to be Thanksgiving week here in the United States. And then after that, we're going to come back off of Thanksgiving. You're probably going to have 1, maybe 2 good weeks in December, and then that is a wrap. You'll see liquidity dry up. Most of the institutional folks are going to be going home, taking a vacation. That's what institutional traders do. That's what big money traders do. That's the goal of everybody here, is to get to that level where they go, oh, we're just going to take December off. Well, most of us can't do that. But essentially, that's what we see in the markets. Very, very slow in December, definitely later in the year. So this is what we're looking at. This is a premium trading week. It really is. T-bill auctions today, not much happened. I'm going to go ahead and go over those for you real quick. Tuesday, nothing. Quiet, very, very quiet atmosphere. We're looking for some big fireworks, though, over on Capitol Hill for Tuesday that really could drive the markets. I'm going to cover those in a minute. Wednesday, UK CPI, EU CPI, FOMC minutes. That's big for Wednesday. FOMC minutes, we're going to go ahead and preview that. Maybe we might trade that one live. I'm not necessarily certain, but we definitely are going to go over exactly what to expect for that, and that's going to be on our Wednesday. So be sure to check our calendar. I put that out a while back before the government reopened, so we're going to go ahead and probably adjust our stream schedule a bit for the rest of the week. So that's available in the How to Trade trading room. Go ahead and check it out. All right, Thursday, non-farm payrolls. We're going to have NFP. We're going to have NFP, believe it or not. It's going to be Thursday morning. The BLS sent out, the Bureau of Labor Statistics here in the United States, sent out a release that said we're going to get September's jobs numbers, and we're going to get them Thursday morning. Why? I have no idea. I have no idea why they're picking Thursday. It doesn't make any sense. They ought to just do it Friday, but they don't want to do it Friday. So that tells us what? Well, remember, somebody's already seen those numbers. They know what if it's really strong or weak. They don't want to release it on a Friday, maybe, because it could cause a market panic. Why would you release it Thursday? You see, these things make no sense. That makes no sense to me. But we're going to be watching it anyway, so we're going to have non-farm payrolls, NFP live for you on Thursday. Friday, S&P Global PMI, Consumer Sentiment. That could be a nice little session, the rebound off of the NFP release. Then you're also going to have Consumer Sentiment. A lot of people are going to be watching that. So you're definitely going to want to check that out. As far as today goes, nothing really. U.S. T-bill auctions, you see right there our yields. Our yields are up a little bit. Our 6-month T-bill yields are up a little bit. And those yields suggest that maybe we're not going to get the rate cut that we thought we were going to get. Is that big? Yeah, it's a pretty big deal. If we don't get that December rate cut, that's going to really send shockwaves through these markets, and that's one of those things that we know the administration does not want to see. Okay, here's sort of the proof of our scheduling for NFP. This is the Bureau of Labor Statistics, the BLS.gov website. The revised news release dates following the 2025 lapse in appropriations. What do you have there? You've got real earnings. Honestly, I don't really know what real earnings is. You don't hold it against me. I don't know what it is. I guess it's coming out Friday. Okay, whatever that means. But what this is the biggest thing right here. Thursday, November 20th, 8:30 a.m. Eastern. So I'm going to have an NFP live for you on Thursday. Be bright and early, but it's my pleasure. We're going to get up and do a little bit of trading on a number that is from September. Do these numbers even really matter? No, but they're going to paint a picture, a real interesting one, and that could definitely impact. That's going to impact everything from stocks to commodities to bonds to everything. So definitely. Now, one thing I didn't cover here on this on our schedule was we've got a big earnings report, and it's from NVIDIA. NVIDIA is a big earnings report, so I believe that comes out Thursday the 20th. NVIDIA is dropping, and that's going to be a real big report. So if you're interested in trading NVIDIA stocks, I mean, to me, it's very simple. You're going to be looking at your yearly range, April's lows, right up there to October's highs, and also the highs that we saw earlier this month, and then a big reversal. So what do you really have for a range? You got about 85, 85.50, something like that. You got it. Is it the best range in the world? It's a yearly range. I mean, it's 85 to 200. So yeah, I mean those are pretty big earnings, I would say. A lot of people are scared of NVIDIA right now. Why? NVIDIA is positioned perfectly in the tech space. They believe that AI competition is going to really cut in to NVIDIA's market share, and I don't see that happening at all. They're one of the megas, one of the monoliths, one of the monopoly people. And when you look at NVIDIA, all I see is an upside, and I think most people agree with me. So I love this correction. It's not unlike the correction that we're seeing in Bitcoin, really. So a little bit of questions surrounding big tech. I'm not too worried about it just yet. But this pullback, potentially, you're trading 186. So if you get a bad earnings report, you got a shot. You got a shot maybe to snap up some 165s. Pretty much not all analysts, but most analysts are looking at that 300 level. They see 300 as being a big deal. I don't necessarily know if that's the case, if that's a viable upside target. But what I do know is when you start putting on pressure on what we call a blue chip in the tech and the AI space, I mean, yeah, NVIDIA's upside is very, very good. The only thing that could slow down NVIDIA probably is tariffs or a lack of rare earth minerals. That could definitely be something like that, and I think that you're going to want to be watching that release. And let's go ahead and just take an earnings projection here. Okay, right there. So your earnings is going to be the 19th. So that's going to be Wednesday. So I was off a day. Don't worry about it. We'll get there. Earnings, we're looking for about $1.25 a share. And then your downside, your revenue estimates are going to be $54.85 billion. So, I mean, that's a tremendous number. I would be absolutely shocked if NVIDIA doesn't beat total revenue. I would expect them to beat that, the revenue estimates. It's all about earnings per share, though. And we know that as these things really take off and these stocks grow and grow and grow and everybody loves NVIDIA and they're the darling of Wall Street, well, that's great. But what does that mean? It raises the bar. It's no different than if I'm a great football team and I'm scoring 50 points a game. You know, the odds makers and the fans are going to expect me to score 50 points a game. If I'm a 300 baseball hitter and I hit 50 home runs, they're going to come to the field to expect to see me get hits and hit home runs. It's the same with NVIDIA. I mean, when these folks make these analysts and these projections, sure, there's some pencil work to it, and we're looking at all sorts of different metrics, and we're trying to build a narrative of what we think NVIDIA is going to do. And analysts do that so they can sound smart. That's what it's all about. But let's be honest. The expectations are high for NVIDIA. And every one of these companies gets to a point where all of a sudden you're not meeting expectations. Well, can you ever meet expectations? And the answer is no. Of course you can't. You can. You can sit down and expect to make 10 ticks today or 50 ticks today and make that in the market. That's meeting expectations. Can NVIDIA ever satisfy the appetite for NVIDIA? No, it can't. So at some point, we're going to see a miss, and the miss in the sky is going to be falling, and people are going to sell, and it won't mean a damn thing. Your trend is up. You're heading up. A key number here for me, I would love 175s probably, but there's a chance here that we get more damage than that on this earnings report. I think it could be a great opportunity to maybe slam some NVIDIA. I'm going to be watching that very closely. We're going to be talking about that on the weekly newsletter as well. Let's see. We have a few questions over here in the live chat. Tina, sorry, I got a little bit behind, guys. Let me see. Tina, when earnings come out, which a lot of companies on the US 500, NVIDIA is the big one this week. If you want to find out which earnings are out, just go ahead and head on over to ChatGPT or Google, type in big time earnings this week, and you'll get a full list. As far as projections go, I don't know if I'd listen much to those. Excuse me, still very dry. I'm getting cold here in the wintertime. It's tough to talk for an extended period at about 5,200 feet, over a mile above sea level, very dry. So to answer your question, Tina, I haven't looked at the full list. I know the big one this week's NVIDIA, though. That's for sure. Let me see, 512 Eli just made it to the office. That's all right, Eli. You can be a little bit late to the office. I can't be, but you can be. No worries. Let me see, NVIDIA earnings. Absolutely, Tina. NVIDIA is the biggie. Let me see, AI tech will drive GPUs through the roof also. I mean, absolutely. The question really is, is it existential? Is it a question for all times? Maybe, maybe not. How high does AI go? Or is AI in a bubble? Well, bubbles are only bubbles if they pop, right? We've been looking at a housing bubble in the United States for 5 years. Is it going to pop? Nobody knows. Everybody always says something's a bubble after it's popped. A lot of folks are saying, oh, we're in a bubble. Yeah, they say that about everything that's up. Is AI a bubble? Of course, but it's also brand new. So there's no telling where the valuations go. That's for sure. I agree with you 100%. Let me see, Lebo. Good to see you, Lebo. I would like to know, what is tick scalping? Tick scalping is taking small ticks repeatedly. We can actually, maybe we'll design a tick scalp here. There's a few that I'm looking at, especially in the futures markets. We'll go ahead and take a peek at those here in just a second. Yeah, Tina, it's a big list, so just be ready. Understand that when those earnings come out, it can shake up everything. It can shake your indices up. Right now, big tech is definitely going to lean on NVIDIA. The NASDAQ's off. It's starting to lose some real market share today. You're going to have to understand when it comes to a titan like NVIDIA, if they have a bad earnings report, yes, it could hurt the NASDAQ. Definitely. Please go through the S&P 500, Shane. I have a short trade. How low could it go, please? Yeah, I'm going to go ahead and cover the S&P 500. We've also got an Aussie CAD trade that we want to look at, and also a couple big key events. Oh, Euro USD trade also that has already developed. I was sad when I saw it today on the dailies because we had a beautiful daily 38%. I'm going to go over that in just a second as well. But ask and ye shall receive. I'll go ahead and hit the US 500 right now. More than happy to do just that. So here's our NVIDIA chart. Let's go ahead and grab our US 500. Now, the question is how low does it go? Well, the way that I like to do things is multi-time frame analysis, and I like starting at the top. So a monthly, the biggest thing I would do right here is I'd say, okay, draw Fibonacci. Our yearly range is beautiful, still incredibly bullish. Okay, that means next to nothing to us. But let's take this right down to, say, a daily. So what's happening on the daily? Okay, we're starting to get a little bit of negative action here on the daily. Does that mean anything at all? To me, not really. You've got a doji that came across the board Friday, so you're starting to trade down. Do you break out? Maybe. Looks to me like some compression in there. There's a couple market drivers that may really send the U.S. stocks down in a big way. But for me right now, I'm watching this, and okay, we're just sort of rotating. So if we go intraday, right, let's say, and just sort of to the tick scalping. So here would be your 30-minute chart. So what are you looking at on your 30? Well, I mean, you're sort of you're close to those session lows that developed about an hour and a half after the U.S. Open. So that would be the first thing that I would look at here, Tina. So if you're holding shorts, you're not wrong. I mean, I'm looking at, I'm in a contest, a trading contest, first I've been in a while, but I'm holding short NASDAQs today because we have a 920 crossover on the daily. But this right here, this is an interesting spike low 66.93. Interesting. I would definitely have that on my radar. That is the session low, and you really wonder how far we extend. So the only way to really figure that out is to step back and say, okay, I've got to find something down there that is potentially downside support. The weekly chart is probably my favorite of all of them. I like dailies, but weeklies are really difficult to argue with. They give us so much information about a five day stint of trading. Tells us so much. I mean, it is really an involved story. Something like this, though, you've got sort of compression inside of the first week in November, then the second week sort of trades in a real tight zone. And now the question is this: are we going to break out? Well, as far as the way that I would approach the market would be just like this. I would be looking at a Fibonacci right from that low to this high. I would want to see where potential support zones are. Right there, 62%, right around 66.60. Okay, you're trading right at 50%, means very, very little to me, 67.10. This right here, though, if I'm marking my charts, if you're looking at last week's low, absolutely huge, 66.48. 62% right there at 66,660. That's a potential downside target. And then also you've got your weekly 13-week EMA, which is down there at 66.36. So there's definitely room here. There's definitely room to catch this break south. The real question is, how does it develop? Interesting. There's a doji, and then you get another doji right in that same zone. So the fact that we're testing the waters beneath that 67.50 area makes me feel pretty good about it. What I would look to do here is sort of refer to a different strategy. I'd say, okay, I've already got my potential downside targets. I'd say 66.60-ish, which is way down the queue, especially if you've got an intraday trade going. I mean, there's potentially a lot of money at stake there. Let's go ahead and let's go to this coded 920, and I want to go ahead and throw this US 500 on it, and let's go ahead and take a look at the daily. Okay, what do you have? Well, I mean, you have a potential cross under developing. That's interesting. That's interesting to me. So if you're looking at that on the daily, it's very similar to what I was looking at with the NASDAQ. So right there, you're definitely looking to be bearish. On today's close, there's a potential that you're probably going to get that sell signal. It's the first sell signal we've got in quite some time on the daily. Let's not get it twisted. So is this the beginning of maybe a major sell-off here in the US 500? I don't necessarily know that to be the case, but it doesn't look good. There's definitely some negative sentiment coming off those all-time highs. So this is sort of what I was looking at earlier. I guess this would be the, what was I looking at? The NQ, NASDAQ. That's what we were looking at there. And right here, I mean, this sell limit, that doesn't matter. This right here is the trade, though. So we're holding shorts right here on the daily. Why? Because that was the cross under. You can see right there. It's a perfect doji, but the NASDAQ crossed under, and this is a continuation of the E-mini NASDAQ. So something like this, we got the sell, beautiful sell up here, and now you can see that we're deep into the profit right now, about $4,300. I would love to see this market absolutely just explode to the downside. I don't necessarily know that we get it, but it's definitely been a good day trade so far. I mean, place that right after the open today based on this cross under. So I'm watching the NASDAQ closely. I don't know that I would marry this trade or really get, oh, yeah, it's going to be the big bang or the 25 or 30,000, but it's definitely a nice little trade, you know. Does the market break out and run this week? I can build a case that it's going to go extremely negative, but I could also build a case that it goes positive. And at least for the NASDAQ and the US 500, a lot of that's going to depend on earnings. That's for sure. So I hope that helps. I hope that helps, Tina. That's definitely how I see the US 500 to the downside. Let's go ahead with a trade update here. The Aussie CAD. This is one that I put out. This is a level that you can watch for later this week. Very basic trade. The reason why we put it out is that Canada brought out their CPI data this morning. Didn't really do much to the loonie across the majors, but it did suggest that inflation's sort of coming in line with expectations. So the CAD's definitely going to be one to watch as we roll on later this week. This is interesting to me. Pulled up a monthly chart. We've got some long-term technicals that are worth looking at. 13-month EMA is right down there at 90.27, and then we got a Bollinger midpoint is down there at 90.18. So right now we're trading about 91.28. 100 pips south of this, Aussie CAD. Watch, keep a close eye on the gold market. We're going to cover gold before we sign off here. Keep a close eye on the gold market this week, sort of flattening out, getting good consolidation right around 4,000, which I love. It suggests that we may be in for a break, either a bullish or a bearish break. Interesting stuff. For me right now, though, I'm looking at potentially a bid down there. So if you got today's trade idea, it was out in the How to Trade trading room. Go ahead and check that out. I also put it out on X. It's ShaneV_trader, and it's also on LinkedIn. I had How to Trade on LinkedIn. So you can go ahead and check us out at any of those venues. But a pretty good trade. I really like this one. I think we have a chance to make a few bucks on a nice bounce. Okay, let's go ahead and get out to our MT5 platform. This is our Switch Markets MT5. What we have developing, or actually it already developed, and it's very frustrating. Sometimes I feel like we should just turn these live streams on and stream like 5 hours a day, and I'll just sit here and trade and call levels because, you know, it seems like these levels that we point them out, we try to be forward thinking, and that really is the goal of these live streams, is to answer your questions and give you as much support as I possibly can. And then on the other hand, it's like, okay, but we're always late. You can never really be on time with these trades, especially if you're not going all the time on a live stream. So when I look at this 38% level, a daily 38% level on the Euro USD, it was an absolute banger trade. And you can see it developed nice little uptrend that developed from a little bit earlier this month, from about the 5th of November. Nice rally, and then there's your pullback. Your pullback zone was absolutely beautiful. We'll pull it up on TradingView here in a minute so you can see it a little bit better. But when you're talking about, 115, 84, 115 or 116 flat, I mean, that was an absolute great trade. Let's go ahead and pull it up. You can see sometimes great. And we got our monthly levels down there, and we understand all that. But the daily is really what fascinated me because it was a fantastic scalp for a lot of reasons. So when we're talking about tick scalping, this probably would have been a tick scalp for me, something like this. So you got a swing low there. You got a swing high there. Perfect. A couple of things that are going. I know Andrea has pointed it out in the past. Really a fan of the 13-period EMA with the 38% level. To me, that's about as strong as trades get, especially for a Forex pair. The only way it would be stronger is if you had like a daily and a weekly that lined up perfect. And this we'll look at the weekly in a minute, or a monthly, a weekly, and a daily, and everything lined up just perfect. That suggests perfect market structure, not in the sense of an ICT trader, but in the sense of a fractal geometric perspective. That's way too big of a word for a Monday. Fractal geometry, the idea is that a big wave is made up of a bunch of little waves that look like the big wave. Well, it's not always the case, but boy, when it lines up, it is like cracking a safe. It really is a beautiful thing. So right there, I'm looking at 38%. I'm going, okay, 115.84. That's beautiful. What else do I have there? I've got my 13-day EMA, 115.86. That's fantastic. So you've got converging indicators right there, and let's see exactly how our trades fared. Perfect. For a Forex trade, I just don't think it gets any better than that. There's your spike low. There's your downside. Your low is what, 115.82, and a beautiful rally. What, 90 minutes later up to 116.02. So what is that? About 20 ticks off of our level, about 15 ticks, something like that. So the real question now is, okay, what do you want to do? Really, what do you want to do? Do you want to just take the scalp, which would have been good for 15 pips or so? This would have been a premium tick scalping area. We had a question about tick scalping. This is what it would have been. Let me go ahead and just get my circle going and just mark exactly when we hit. But this bounce, even though it's not a lot, it's enough. Remember, you don't have to be right. You don't have to know what's going to happen in the market. Like that short NASDAQ position. It looks great, doesn't it? I mean, you sit there and you're looking at it going, oh, patting on the back, going, oh, I read it perfect. Here's the thing, though. I don't know what's going to happen later today. They might come out and say, okay, all tariffs are off. If they do that, the NASDAQ goes through the roof. So the question is there more money in being able to call a market on a swing trade, say, or tick scalping? And my answer to you is very simple. The swing trades are going to be huge winners. You're going to look at trades that are just going, wow, made a fortune on that trade. That's why a lot of people only focus on that, and that's great. But you can make a lot of money tick scalping as well. If you get in there just right and you're looking for 5 to 8 ticks, maybe even 3 to 5 ticks with heavy leverage, you can get in there and you can make a lot of money tick scalping because you have an opportunity to place a lot more trades. Swing trading takes time to develop. Tick trading is absolutely fantastic. In the futures market, that's what I do. I look to take small ticks repeatedly. It takes a lot of patience. You have to have the right technological infrastructure in front of you. But if you get into it just right, you can do very well just taking small points. So in this case, it's Euro USD, and we don't really know what's going to happen here with this. It may trade higher, it may trade lower. Doesn't matter. Let's go right down to a 1-minute chart and see exactly what happened when price hit our level. And this is why I'm just a true believer. These levels are very, very good. Now, is the Euro USD the best thing to be tick scalping? Probably not. A lot of times you have to deal with a spread. Like right now, that spread's about a tick and a half. That's no good. But there's your low and there's your bounce. What's your bounce? Right off of our level, 115.89. You're printing 115.84-ish. So if you got long, what'd you take? A pip draw, and then you rent it for about 10 minutes, which honestly is too slow for me. If I'm tick scalping, I want to be in and out. But if you're going to do that on a Forex pair, you have to be ready for that. Something like that, though, 5 ticks, 10 minutes, a little slow. I like futures because they're fast. But this right here, great trade. You didn't take a draw. You got the bounce. Your longer-term technicals came into play. This is sort of, I've done a lot of these streams, guys, and I don't know. I'm okay. I know how to call a market. I know how to trade. And it's one of the tenets of what I really have preached, and I'm pretty passionate about it. I sort of say, hey, listen, your long-term technicals are better than your intraday technicals. It's not close. It's not even a contest. And the biggest confusion that I've got from traders all around the world, professionals and novices alike, most pros yell at me. They say, you don't know what you're talking about. And I said, yeah, I do. The thing of it is when you have those long-term technicals, when they line up for you perfectly, the short time frames and the price behavior around these levels is uncanny. On intraday price action, it's uncanny. Why? Because the orders are either there or they're not. If the orders aren't there, you're going to lose. If the bidders aren't there, you're going to lose. If the sellers are there, you're going to lose. But if you're looking to buy that zone and grab a pop off of it, you're far better off looking at longer-term technicals. You just are. Now, it's a hard concept to get in there going, okay, I'm going to use a Fibonacci on a monthly, and you're telling me I'm going to trade that on like a 1-minute chart? Yes. That's exactly what I'm telling you, because it's either there or it isn't. It gives you the opportunity to keep your stop losses really small, and look to get that immediate bounce and take a few ticks and say, okay, then we step back and look at the level. Now we step back and say, okay, what's happening on this daily Euro USD? 4-hour chart. What's happening from our zone? As soon as I can line this up. Okay, bullish candle, 4-hour candle. Is it important though? Is it a doji? Is it anything? No, not really. It's not a hammer. I mean, I would call that a doji. We could very easily trade back down to that 115.84. We're only 6 pips off of it. Should we take that trade again? Maybe. Might not be a bad one. Okay, so on a 4-hour chart, let's say I want to take a position. I'm saying, okay, I've got a long-term support zone there. What can I do? Well, let's go back to our coded. Let's go coded Euro USD. Let's go 4-hour chart. Got a sell signal setting up. What does that mean? It's not necessarily good, is it? It means that our level may or may not function. If I saw this on the 920, this sell, and listen, we've still got 3.5 hours, but if this was to set up, and I'm looking at my level going, I don't know. Probably would scare me off of holding a long position. But if I'm a tick scalper, I'm already out with the money. Then the question becomes, do I just take another shot at 115.84? There's a lot going on there, guys. Preach. 512 Eli, preach. Nah, I don't like preaching. There's too many people out there preaching with strong opinions. That's for sure. Let me see. Yeah, we'll definitely we got to cover some fossil fuels here because our stories are huge. Our news cycle is going to be huge here in the next 48 hours. It really is. Let me see, Tina. Long pending order on oil, but not triggered at 60.42. I'm bearish crude oil, but it hasn't moved off of 60. I'm going to show you why here in a second. Let's see. Hello, Lulu. Hello, Lulu. How are you? I'm doing very well. Glad to be back. That's for sure. Let me see. Mike Rodriguez, new to your channel. I trade Forex, but I'm confused when you say ticks. What I mean by ticks is pips. So, Mike, when I'm talking ticks is typically what you say in the futures market. A couple of ticks here, a couple of ticks there. That's essentially what it is. Now, a pip is what we use in the Forex. So I apologize for the confusion, Mike, but ticks and pips, you could probably interchange them. People like to say pip in Forex because it means point in percentage, which essentially is a currency term. For me, I just go with ticks or points because I know that the smallest increment of movement typically is a tick, unless you want to talk about fractional pips in the Forex. If you want to do that, then you're right. I ignore fractionals because I don't play with that much leverage. I mean, it shouldn't hurt. So, yeah, they're pips. Absolutely. Great question, though, Mike. All questions are welcome. It doesn't matter what they are. It's important that I square things up and everybody's on the same page here. Does future have a different chart? Yeah, the futures are always going to have a different chart than your Forex pairs because they're futures contracts. So they're going to be priced a little bit different. A lot of times they're the inverse. That can be hard to read. That's why I don't talk a lot about, like your 6E contract, your Euro FX futures. I don't talk about that much. And the reason why is it's priced differently. It's just going to cause a lot of confusion. Like the micro Euro FX, that is priced like the Euro USD, pretty close. It gets really difficult. But so yeah, Tina, it does have a different chart. That's why we do some futures contracts that sort of track and give me a chance to really trade for you. But most of the time we just stick with the Forex charts because everybody's pretty privy to that. All right, let's see. What else do we need to do here? We need to talk energies. Tremendous story developing here. Happened over the weekend. Most things do. The USS Gerald Ford aircraft carriers in the Caribbean. Operation Southern Spear, that was announced by the U.S. Defense Department. Trump has come out and basically said that he's opening negotiations with Maduro of Venezuela. And what that all means is they're going to give Maduro a chance to step down before things get a little bit ugly. This is a major battle group that is now in the Caribbean. They're right off the coast of Venezuela, and most people believe that an attack there is imminent. So I've been saying that for 2 weeks. I sort of feel a little silly about bringing this back up now, but it is one of those things that we have to be aware of. The biggest impact that this will have, I don't know that it's going to shake up your financial markets a tremendous amount. I don't think it's going to do anything to the dollar. Stocks may react a little bit negatively, but the big thing you got to remember here is it's going to be all about energies. Venezuela is a major oil-producing region. The idea here will be if it turns into a regime change type of a thing, will the next regime be friendly to the United States? Meaning, will they do business with energies on a large scale? Now, for years and years, that was the case. The Maduro administration, or whatever you want to call it, it's been a little bit different dynamic. So this is a biggie. This is a biggie for energies. Let's get right out to price action here. The natural gas trade that I outlined, we need to cover it just because it was a beautiful 920 crossover. And what was interesting was last week to me. You can see right there, this was great. We were shooting for June's high right up there around 4035. The fall seasonality typically means bullish natural gas, completely bullish, and it really was. We broke probably late October. That's all winter seasonality. You saw that big run, but also the threat of a strike on any sort of energy producing nation, anything that will take supply off of the board or impact consumption potentially is going to send energies higher. Natural gas, you're already in fall seasonality, which means the bidders are interested just from a hedging perspective, a commercial hedging perspective. But past that, greater than that, the idea of a strike on Venezuela sent things through the roof. So when I look at this, I say, okay, great. We hit June's high. I thought that was a conservative profit target. That was a great trade. Probably nobody traded that, and that's fine. But it's a great illustration of how this 920 on the right time frame can work. Got a lot of comments over the weekend. I went through my YouTube comments. A lot of folks, there was one person in there that said the 920 is complete garbage. And I said, yeah, you don't know what you're talking about. It can be very good, but you have to use the right time frame. And undoubtedly what happened was that person took the 920 EMA, the 9 EMA crossing over the 20 or under the 20. They put it on a 1-minute chart, and they traded it during a flat period, and they lost. From a position trading standpoint, I'm not sure that there's much better than the 920. It can get you into a lot of really great trades. So what happened in natural gas? Well, we had fall seasonality. Then we had the threat of a potential war with Venezuela. You had a great big spike. So when we step back to this, though, the level that I pointed out, and feel free to go back to any of the old live streams. We've got them all cataloged. They're either on the YouTube Switch Markets channel or they're in the How to Trade trading room. I really outlined that. Now, this right here, this is a macro wave. Now, this is the type of thing you should have been seeing on like CNBC, Bloomberg, Fox Business, all these guys. They should have known that natural gas was okay. This is the deal for gas. I didn't see it once. There's your highs. There's your Russia-Ukraine highs. Russia goes into the Ukraine. Natural gas spikes up to about 10. Then a bunch of moves were made. I could write a book on this, really, this period. Russia all of a sudden pegging natural gas to the ruble. You're going to buy gas from us. You're going to do it in the ruble. And then the currency war started and all these things. And, well, it all worked to really drag natural gas down. And nobody really had that. Nobody, it's going to be bullish because of war. Well, that didn't last. Big time sell-off here to these lows back in February of 2024. So what does that mean? It means you got a major wave. Huge event right here drove price to not all-time highs, but up around 10, which was crazy for natural gas. And then you came out of that winter seasonality in 2024, and the sellers were saying, okay, we're going to dump it, and now we're going to start looking to bid things back a little bit. Our previous high was right there at 38% of that wave, 473.8. And what did we do? We broke out on the news and fall seasonality, and we went right up there and hit that level again, 47.56, and then sold off from there. It was really a brilliant trade. That was a macro zone that I liked a lot. I liked that one a lot. So keep an eye on natural gas if you're trading it. It's always been a difficult market for me to trade. It's not the deepest thing in the world. Big sweeps, big moves are definitely present in that thing pretty much every day. So you got to be very, very careful with how you trade natural gas. But that game plan right there, that was enough. That was enough probably to make a lot of people's years. I mean, you got a great position. You caught that fall move just right, and then you came in with topside resistance and nailed that. That was pretty good stuff. All right, let's go ahead and dive into WTI crude oil here. My specialty, I'm an energy specialist. This is sort of, I don't know if you can say I made my bones, but I definitely came up on energy. And that was what I was taught first and foremost, was learn how to trade WTI crude oil futures and still do it. So that was good. That was back in 2011. So what do we have here? Well, I mean, my analysis has been very simple. I like yearly lows. I like new yearly lows. Well, we haven't got it. We haven't got that to develop here in November. What do you have? You have compression. We lost 2.5% there in October. November's been off about 1%, 1.36. It's nothing really. We're still looking at those yearly lows. I like the opportunity potentially to get the breakout runner, but I have to tell you, with an invasion or a ground war or any sort of conflict with Venezuela setting up, you're not going to get a big bearish break in crude oil. What will happen if the United States hits Venezuela with any sort of force, and if there's any uncertainty at all to that situation, you're going to see a bounce in WTI crude. In my opinion, $60 is sort of where the traders we're going to take a wait and see from here. If they hit it initially, that's going to give us probably a $3 or $4 pop to the top side, at least temporarily. If they don't hit it, that's going to be a bearish market driver. Nobody really knows what's going to happen. If I was betting, I would expect either a deal to be cut with Maduro for him to leave and war to be avoided, or they're going to hit him. And my guess is if the United States hits Venezuela, it's going to be airstrikes on specific locations. They already know it. It's going to look a lot like the bombing of the drug boats in the Caribbean. That's what it's going to look like. You're going to have a few targets on the ground that are going to get obliterated, and my guess is that'll be the end of it. If it turns into ground invasions, if it turns into something really messy, then crude oil goes up to $75 immediately. If it looks like it's going to be messy. So that fundamental, don't ignore that if you're trading crude oil. Don't ignore that. That's a big one. Now, as far as what we can do right now to trade it, beware, 60 clearly is going to be sort of our point of control. And what I mean is that's the area that's really been that's sort of the 10,000-pound elephant in the room has been 60. So when you look at 60 just as a key zone, there's no question about it. And this really is when the idea of the Venezuela, a strike on Venezuela did start catching air. This bullish breakout right here was like, okay, well, now they're talking about hitting Venezuela. Right here, we were in pretty good position down around 55, somewhere in that zone. Well, then we broke. Okay, we jammed high, and then we start chopping sideways, right? So now you're chopping sideways. What's the common denominator? The common denominator, I mean, as sure as I'm sitting there, it's $60. So if $60 is where you know the market seems to want to go, something's going to have to move it. And if in fact something's going to move it, what do you think that's going to be? Two things in my view, well, three things. Two of them work together. Number one's winter seasonality. That's a bearish market driver. That should be sending us down to yearly lows, and it should have already happened. The reason why it hasn't is we've had rate cuts from the Fed, and we've also had this Venezuela stuff. Once that uncertainty is gone, let's say the Fed doesn't cut interest rates in December, and let's say you do hit Venezuela, what happens? Probably trade 60 more. What if you don't hit Venezuela? Price is going to start coming off. So 60, no question. This is the common denominator. Pretty good move last week. I mean, I wasn't watching it, but it looks to me like, you know, you're making a run at those lows. It just didn't quite get there. Now the bounce is right back up to 60. So be aware of 60. As far as my dailies go, take a look at what U.S. oil is doing. Bollinger Bands are flat. They're parallel. That means it's a flat market. There's an old saying, at least, you know, well, that's what I was taught. It's the alligator's mouth. I've drawn this a few times, but none lately. But, you know, the alligator, when the mouth is closed, you don't trade. You trade when it's open. Well, what would make an open alligator mouth? It was if these Bollinger Bands decided to finally open up, something like that, you know. So we're just not seeing it right now. What do I think is going to happen in crude oil? I'm still bearish. I'm sticking to my guns there, but it's not pretty. This has definitely been a challenging fall for crude oil shorts, no question. So if you're, let's see, the question was, you've got a bid. Let me see, Tina. Long pending order on oil, but not triggered at 60.42. Yeah, I mean, I don't hate it. I don't hate it. And the reason why I don't hate it is you're going to be looking to play a breakout above, you know, last Friday's high. I don't really have a problem with it. Could you get some up topside extension? You know, the idea behind that was, yeah, all of a sudden, if you're playing above, you know, if you're taking the bid above last Friday's high, and then you hit Venezuela, yeah, you're in the position to make a lot of money. You're looking at, I mean, honestly, your topside target would be 62.50, 65, maybe somewhere in there. Do we get that? I don't think so, but it's possible. I'm willing to admit that it's possible. And if it's possible, is it probable? I don't know. It depends on the news, you know. A wise man once said, I don't know. If I don't know, I'll tell you. This has been one of the more challenging falls that I can remember for WTI crude. Typically, it's very easy. You just get in there, you wait for a nice position, and then you take it to the short, and it's easy. This is not easy. This is a news cycle. This is news-dominated trading, no question about it. Intraday, if you wanted to look at intraday, what could we do intraday-wise? 30-minute chart, flat. Let's go ahead and knock out the U.S. session here, or block it out. Remember, U.S. session, my time is going to be in the Mountain Time Zone. Eastern Time, you add 2 hours to this. Your beginning of the volume typically is right around 9 a.m. Eastern. That's a traditional NYMEX pit. Open for WTI crude, and for some reason we're on the screen, but it's still there. So when we look at something like that, I'd say, okay, what's going on? We're flat. We're flat right around 60. Do you expect a breakout? Not really, not today. I think we're waiting on the news, and I think that's the big takeaway from U.S. oil. But if you're looking to bid, 60.42 pending, it's not bad. You're playing a breakout above Friday's high, essentially. It's not a bad trade. All right, last one I'm going to look at here is going to be gold, unless there's anything else you guys want to look at. Let me see. You can't. Yeah, we have to trade futures, Tina. We can't trade CFDs here in the United States. You know, the market, you know, is still very similar, but futures are they're exchange clear. That's a long conversation, but yeah, you have to trade like on gold and all these things. You have to trade futures contracts. Let me see, Tom. Good to see you, Tom. What is an A book and a B book? Yeah, an A book and a B book is pretty simple. It's an OTC term, and essentially what an OTC market is, it's over the counter. That means that you're doing business directly with your broker. So your broker or your liquidity provider is going to do a couple of different things. Number one, they can A-book you. Your A-book means that they're going to send you potentially your orders are going to go through to the broader market. Now remember, the Forex, CFD markets, these are OTC markets. That means it's a bunch of liquidity providers that are going to take trades from traders like me and you. It's not just an exchange. In exchange and the futures, there's one place clearing all the trades. All right? The Forex is a decentralized exchange, digital exchange. So you have lots of liquidity providers and lots of brokers, and they're all sort of making deals. They're covering your trades, right? Well, if you get an A-book, they're going to send you to the market. The market essentially is a group of liquidity providers that are going to fight over your order, and you're going to get filled. The matching software is going to fill you. You're going to be trading essentially on the open market. That's what that means. Now, one of the things about an OTC market is that a lot of folks don't like them for a lot of reasons. I see tremendous opportunities in them. You just got to make sure that you're trading with a broker, gives you good spreads, good liquidity, things like that. That's called an A-book. The B-book. The B-book is when the broker essentially takes your action and serves as a liquidity provider. That's what it is. So if you're an A-book, probably you're a bigger trader. You've got a little bit more money, and they're going to go ahead and lay your action off to the bigger liquidity providers at the entire market, from the aggregate market, right? You're that liquidity pool. If you're going through a B-book, what a B-book does, a B-book broker says, okay, this trader specifically, I'm going to assume the other side of the trade. A lot of times those are smaller retail traders. A lot of times those are traders a lot of times the quotas at the market are full. Meaning, okay, we're going to go ahead and B-book this. We're going to take these trades from these traders. We're going to serve as a liquidity provider. That's essentially what it means. B-booking gets a lot of stigma because your broker theoretically is supposed to pass you through to the market. I don't necessarily think the B-booking is that big of a deal as long as you're getting tight spreads and liquidity. I really don't care who's got the other side of my trade. I'm just happy to see that somebody's got it. So that's essentially what a B-booking is. Team Marina, B-booking, your broker trades against you. Essentially, yes. I mean, they are the other side of your trade. Yep. And the beauty of it, if you're an accomplished trader, if you hang around a little bit, and it really is similar to sports gambling in a lot of ways. I don't want to say that it's gambling because it's not, but if you're an accomplished sports gambler, after a while, the casinos or the bookies won't take your bets anymore because they know you're going to win or you know something. As a trader, the best if you're not interested in somebody B-booking your trades, just win a bunch of trades. And then I promise they won't be lining up to take the other side of your trades. They're going to look for somebody else to take them. That's the way that I look at it. Let me see. Eli, Great Britain pound, Australian dollar. Okay, we'll go Great Britain pound, Aussie, and then we'll go gold, and then that'll be a wrap for today. Maybe we'll look at silver. I might save that for the newsletter. Let me see. Tina, are brokers liquidity providers? Who gives traders big leverage? Yeah, I mean, so the leverage is interesting. The leverage is going to be extended to you by your broker. You're going to put up what's called a margin, maintenance margin or initial margin. All right, that's going to be a good faith deposit that you're making with your broker. Your broker is going to facilitate you taking larger positions in the broader market. Essentially, that's who's giving you credit. You can think of the broker as the bank. They're not really the bank, but they do facilitate those positions. And the reason why is the size of these contracts and the size of these positions typically warrants some sort of leverage. So if I wanted to trade WTI crude, one contract of it, the notional value is a lot more than I can deposit and trade. I don't know what the notional value is. What's 1,000 barrels at $60 a barrel, so 60 grand, something like that. The notional value of the contract would be 60 grand. Theoretically, I would have to pony up 60 grand like a share of stock, like buying a share of stock. The way that brokers do this, and they say, well, we would like to take business from folks that don't want to put 60 grand out for one contract, right? So the idea is very simple. They say, well, let's afford some loans, which essentially is what these are. It's a good faith. You're making a good faith deposit with your margin money. All right. So if I want to trade that same one barrel of crude on the futures market, right? I come up with my intraday margin, which is, what is it, 1,000 or 1,500? Depends on your broker. So I put up $1,500 and I now control that contract in the market. That's big. What that does is that lets us take a little bit of money in and control something much larger. Now, the downside to it is you don't have staying power. You're not going to be able to sit in the market and hold that barrel of crude oil come hell or high water. You're going to have to bounce. If it goes way up against you or if it goes way down against you, you got to go. Now, your broker understands that as well. That's why the margins are always moving. Typically, volatile periods, your margins get big. That's essentially what you're looking at there. So that's what it is. Let me see. Team Marina, that sounds shocking. Yeah, no, it's basically B-booking is your broker is assuming your action. They're taking the trade. Personally, I don't care who takes the trade. If they want to trade against me, let them. That won't last very long. I'm just kidding. I'm glad to be back. But glad to be back in front of the screen. Let me see. Magodi. See, I'm terrible with names. Sihile Magodi. Hi. How are you? I'm doing very well. All right, we got a couple markets to hit, and let's go ahead and call it a day. Let's go. Great Britain pound, Australian dollar. That's a good place to begin. Let's go ahead and start off with this one on the 920. Let's see what the 920 crossover has to say. Interesting. Okay, great. 4-hour chart. If you're going to trade the 920 EMA crossover strategy on Forex, 4-hour chart's a pretty darn good place to begin. So you got a 4-hour chart. You've got a daily chart. Those are pretty good places to begin. Now, there's potentially a bid signal that came across the board last Thursday-ish. Is that still in play? Yeah, it's doing pretty well, really. Not bad. This would have been a situation where if your stop loss was right here, and always remember, don't be a pork chop. You've got to pad your stop losses or that will happen. It's guaranteed. I see a lot of traders, Shane, my stop loss. I go, don't be a pork chop. Don't put your stop loss in an area where everybody can see you and that you're going to get hit and then the market's going to reverse. It makes me physically ill to see that. I don't like that. Sick. It makes me sick. I've had it happen to me. I don't let it happen anymore. So right here, boom, your stop loss is down here. Well, I can't risk that much. Then adjust your leverage. Let's see, your low of this swing low right here is 2.0070, right? 2.0056. That's nothing. You're right there. Give yourself a chance to win. All right. In any case, since then, it's been a rally, so you're kind of bullish right now. Let's go to a daily. Interesting. So you got a daily sell back here on the 27th of October. Sort of been a little bit bearish. Interesting. That too. Why do you think that level right there has been important? Look at the daily. Wow. Look at all that. So we're getting ready maybe to put on a long side play. I would say from a swing trading perspective, yeah. You've got that 9 potentially crossing over that 20 in the coming days. I would be watching that closely. If that does develop, that could be a signal potentially to send it long. As far as, what could we be looking at Fibonacci-wise? Well, your breakout's sort of already on here on the daily. Let's go back to that 4-hour. If you wanted maybe to scalp. Yeah, this is really tough. You're sort of choppy right here. You could try to catch the breakout, but I wouldn't really put much stock in that. Let's go ahead and pull up the longer term stuff, or not the longer term stuff. But let's go ahead and go look at some Fibonacci's here. Okay, right there you can see we've already had this one marked. There was your monthly. Your monthly was a big deal. Spike low right there, spike high. There's your compression. There's your pullback, right? So boom, right there, 62% is at 2008. And it looks like we were looking for a profit somewhere up in that zone. Let's go ahead. Let's go to the daily now. Be bullish here. Is it too late to buy it? Yeah, probably. This was the bid. Let's just be honest. That was the bid down there, somewhere right around 20080. That was the bid. So now you're sort of seeing the breakout. If you're already long, great. Topside target 20389, probably a pretty good area for it. This zone right here, though, this is probably the one I'd be watching. You probably wanted to already be long. If you're not already long, it's all right. Let's just wait. This is going to be a much more expensive trade, but if that daily crossover does develop, you'll have a chance potentially to get something done. So hope that helps with the Great Britain pound, Australian dollar. Gold. Everybody loves gold, right? Interesting pattern here developing on the daily. This isn't the prettiest cup with handle, but it is a cup with handle. Like I said, I don't draw very well. Is that a cup? You betcha. Now it's developing. Well, nothing just yet. Potential. Definitely potential there, but a potential long setting up, of course. This is an interesting. We could draw a trend line here if you wanted to really draw the top of this thing. Something like this on the daily. So there's your all-time highs up there at about 4,300. Interesting. Keep an eye on that. That swing high from last week, 42. Now, as far as the rest of this goes, most of us in the, trading community really were bullish gold. Still am. I still am. We're starting to see the tides shift a little bit, and that has to do with our interest rate expectations. Ties back to those yields. We saw those yields go up a little bit earlier today. Let's go ahead and try something like this. Weekly chart. Okay, so what is it? It's an uptrend, clearly. Pullback, compression break. Now we're just mucking sideways. What's the key level here? 4,000. No question about it. Definitely have that marked. So do we want to bid 4,000 again? I mean, it's been pretty good. You can see that doji right there that developed 2 weeks ago. That was all about 4,000. Then you had sort of a break last week, run at the highs. Now we're coming back down. Let's run our Fibonacci's, see what they give us. Spike low there, up to that macro wave, those all-time highs. And what do you have? 39.75. That's interesting to me. So the area between 4,000 and 39.75 is probably going to be a pretty good one for a potential bid. So would I bid 4,000s aggressively? Maybe if I was a tick scalper, just looking for a small gain, maybe just a bump off that level. But right down there, 39.75, something like that, you may have an opportunity potentially to get a little bit of a scalp later this week. I think that could be a pretty good one. 39.77.50-ish. It's about $100 down the cube, but we could get there easily in this environment. So that's what I see basically for gold. Let's go through the gold on the 920 because we really are still looking for any reason to buy gold, believe it or not. So right there, okay, there's your bid. This one developed last week, had a sell develop there. What's happened to this chart? It's flat. This is what we call a weave formation. When you're getting frequent crossovers, that's not good, especially if you're a crossover trader. So do you want to be holding longs or shorts? Well, we sort of really tried to shy everybody away from going short on gold, but that's okay. If you got short, you got out. You got stopped out here relatively quickly. Shouldn't have been much damage. This bid right here is interesting, a little bit trickier now. You had a nice rally. Now you came back for a few days. Is that out of the realm to bid right now? Probably bid right now. There's sort of your swing low. Go to that all-time high. There's your pullback. So now you're right at your moving averages. You're still working this buy if you bought it. Your stop loss probably is down here right around 39.26, somewhere in that zone. The real question is, can you risk that much? Probably not. Probably not. Is this a good long side entry? If you're still playing this move here, yeah, you probably could just hold your longs and see what happens. Definitely moved against you a little bit, no question. Was looking pretty good a few days ago. Now it's not looking very good at all. Are we bullish or bearish gold? Bullish. No question. Let's check one other thing. Could this market really sell off? Yeah, it could. We could get hit here. Why? Interest rate expectations. Remember, we got FOMC minutes on Wednesday. Right there, the next FOMC meeting is in about 23 days. We'll have FOMC live for you there. But take a look at what our expectations are. Target rate stands at 375 to 4. It's a 50-50. It's 60-40 that they hold rates firm where they're at. That's why you've seen the weakness in gold. That also speaks to how much money is going into the crude oil market in anticipation of a Venezuela strike. This type of thing right here, we were basically told you're getting back-to-back rate cuts towards the end of the year. That's what we were told. Doesn't look like that's going to happen now, at least as of right now. That's fascinating to me. So that's one of the reasons why you're seeing the weakness in gold. Just stay tuned. If it looks like they're going to cut rates, gold will go back up. If not, we know 2026, we know what that's going to be. That's going to be the year of the rate cut. New FOMC members, a new FOMC head, and then you're also going to have an opportunity potentially to get in to a rate cut cycle that is fairly dramatic. Start thinking like 2.25% prime rate, 2.5% prime rate. That's big. Okay, guys, one last story that I have to cover. This isn't a political live stream, but be aware of this. Tomorrow, the U.S. House of Representatives is going to vote on releasing the Epstein file. Supposedly, there's a tremendous amount of information related to Epstein and his operations. If you don't know what Epstein is, I'm not going to explain it. But what I will say is supposedly there are some very, very powerful people on that list that are implicated in some bad, bad things. everybody from hedge managers and big bankers to politicians. If they vote to release this thing and these files are released, expect turbulence in your financial markets. Hedge fund managers, banks, mega bankers, politicians, nobody's going to want to be affiliated with these folks. And so if some big names come out, maybe people that are managing funds, maybe they're big in the tech space, or maybe they're company CEOs or whatever, be ready, because if positions start getting liquidated, it could definitely bring some turbulence to the financial markets. Then again, it could be a nothing burger. We don't know. But I think that you're going to see a little bit of turbulence according to that. And be ready for it. When they're actually released, nobody knows. But there's going to be a vote on it tomorrow, and you're going to see it. As of right now, it looks like they're going to vote to release them. So in the last couple of hours, Trump's done a 180, and he says vote and release it all. I'm interested to see exactly how this happens. All right, guys, I'm going to go ahead and sign off. We covered a lot here today. A big week. Keep an eye on our stream schedule. We're going to have NFP live for you on Thursday morning, and then also the FOMC minutes on Wednesday. A big release. A lot of folks really like that one. So we're going to go ahead and do that. If there's any questions at all, be sure to reach out to me over at howtotrade.com. And remember, if you need a broker, head on over to Switch Markets and get in on the action. Once again, you've got probably 3 good weeks left in this year. It's already week 47. So when we get to week 50-ish, probably not going to be the best trading. All right, I've gone for long enough. I'm going to go ahead and sign off for right now. You guys have a fantastic trading session. Keep an eye on that news cycle. Venezuela and the Epstein files are going to dominate the next 48 hours. We're watching also anything out of the Fed, and our markets are interesting right now. You sort of, sometimes a plan comes together, right? Every now and then a plan comes together, but let's just go ahead and take a look at this one more time. Intraday shorts are looking good. Intraday shorts are looking good, especially on this NASDAQ. Interesting stuff. Interesting stuff. Caught a pretty darn good move right here. Crossover set up. This definitely is pointing towards bearish action. I think your US 500 is probably in pretty good shape too to the short. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.